Our next panel will discuss privacy in cryptocurrencies and will be moderated by Sam Abbassi from FCAT and will be featuring Matt Odell, a well-known Bitcoin and privacy advocate, Riccardo Spagni from Tari Labs and Monero, and Tom Robinson from Elliptic. I'll pass it to you, Sam.
Thank you, Ria. So this panel is called Privacy in Cryptocurrencies. Let's have everyone go around and introduce themselves, and then we can get into questions. Let's go Riccardo, Tom, Matt.
Hey everyone, I'm Riccardo Spagni. You may know me as Fluffy Pony on Twitter. If you don't, that's my Twitter handle. And I'm the former lead maintainer for Monero. I'm still a maintainer, just not the lead one anymore. And I'm currently working on building Tari at Tari Labs.
Hi everybody, I'm Tom Robinson, co-founder and chief scientist at Elliptic. We provide crypto businesses and financial institutions with blockchain monitoring tools that they can use to identify illicit activity and meet their regulatory obligations.
What's up, guys? Matt Odell here. I'm a Bitcoiner who cares about privacy, and I tend to speak my mind. It's an honor to be here. Thanks for having me.
Great. And my name is Sam Abbassi, and I'm a director of blockchain products at FCAT. I focus on Bitcoin products, and I help define the vision of Bitcoin development and experimentation at Fidelity. So let's start with the most topical and obvious development. The IRS has started a pilot for tracing transactions on Monero and Lightning. Riccardo, I wanted you to go first on this. What happens to Monero and what happens to Lightning and Bitcoin once there is a tool for this? And how does this affect Monero and Lightning?
So I think maybe the best way to view it is that privacy, whether it is on Lightning or Monero or TLS, privacy in your browser or Tor, all of these privacy enhancing mechanisms are not a state that you achieve. You don't go like, oh, well, we've now solved privacy and we never have to worry about it again. It's always a cat and mouse game. So you have to expect, you have to take the adversarial approach and expect that attackers will develop attacks against your privacy system, and you have to continuously improve it. So if a tool does exist, or as and when a tool exists, it's only really effective for a small period of time at best. And if you are constantly striving to improve your privacy technology, and you have a large community of contributors and researchers who are working on it, then typically you tend to stay ahead of even the most sophisticated attacker.
That's an interesting point. So it's continual development is kind of the best defense. Tom, so you've actually made the point. I was during Mainnet 2020, you made the point on a debate with Alex Gladstein, who spoke yesterday, that I'm trying to find it here, that Bitcoin without blockchain analytics would be a privacy coin. And we already have seen in UK and Japan that regulators and banking partners of exchanges are increasingly putting huge pressure on those exchanges to delist privacy coins. And without blockchain analysis, we would see that for Bitcoin as well. So the point, I think at its core, was basically saying that blockchain forensics companies have helped with the mainstream adoption of Bitcoin. Can you talk about that point, and also if that is relevant to what's going on with the IRS and Monero as well?
Yeah, so we started Elliptic back in 2013, and the motivation behind it was to try and help cryptocurrencies go mainstream. And the big challenge we saw at that time was that regulators were scared to death of crypto. It was very difficult to even get a bank account because banks were scared of crypto. And I think that that's changed over the past few years, and access to crypto has expanded because regulators have got more comfortable with the risks. Banks have become more comfortable banking crypto businesses because these businesses have developed proper compliance programs that can deal with the financial crime risks. And I think that blockchain monitoring capabilities have been a key component of that. So I think that the development of these techniques have actually helped to expand access to crypto assets in general.
Matt, do you agree with that point? Is this kind of like the converging interest where the privacy conscious Bitcoiners and the analytics companies can find some common ground, or do you truly see a protracted kind of continual arms race and Cold War for this pursuit?
I mean, I think, you know, one of the beauties of these systems is that they are open, that they are permissionless. and that anyone can do what they want with them. So I think no matter what, you're going to see these chain analysis, chain surveillance companies existing. I can see the argument that it made it more acceptable to regulators, that it made Bitcoin more acceptable to regulators, and I would say in general, the fact that we have more liquidity in Bitcoin, that we have more adoption, that we have a higher price, which helps the security budget, does end up helping other users that might not value necessarily those kind of like compliant regulatory on-ramps. But I would be cautious to overstate it too much. I think that the value prop of Bitcoin is kind of outside of this regulatory purview, and all of these discussions are to me, it seems like it's more of a short-term thing.
Okay, great. And can you talk a bit about your work in funding Bitcoin developers? I know you have Chris Belcher on your website for CoinJoin, or for CoinSwap rather. What are the efforts there, and why do you do that?
So I mean, we don't, Bitcoin being a free open source project, we don't have any dev fund that we can grab onto like a lot of these altcoins have, especially the VC funded ones. So funding has been historically community driven. And fortunately, recently, we've seen a lot of companies stepping up and providing grants to Bitcoin developers and just open source developers that are on the sides of Bitcoin, building apps and whatnot that we need as Bitcoin users. So that's been fantastic to see. And from my platform, I've tried to encourage more and more of companies to come forward and provide those grants. I did help a little bit behind the scenes with HRF's new grant program, which is also fantastic to see. And we have the ability for people to donate tax deductibly through HRF. I'm a huge fan of what Alex Gladstein and the team over there are doing. So Bitcoin Dev List was a separate side project of all of that. And the idea basically was allow individual Bitcoiners to contribute directly to Bitcoin developers, ideally using Bitcoin, but also we list GitHub sponsors page, which is basically like a Patreon-esque service that goes through GitHub, which is owned by Microsoft now. So they can contribute with fiat as well. And basically the idea was, I had a lot of people coming to me. They said, I want to donate specifically to Bitcoin developers. But all the donation pages were really disjointed. So now there's just a single page you can go to, bitcoindevlist.com.
And Tom, is that making your life more difficult or your work harder? These initiatives like CoinSwap or I guess CoinJoin in general? How does that affect what you guys do?
Yeah, so we're not trying to de-anonymize or trace through these privacy preserving technologies. What we focus on doing is giving our customers the intelligence about whether one of these privacy preserving technologies is being used. So for example, has a customer deposited funds from a CoinJoin from a mixer? They can then do their own investigation into whether this represents somebody who just wants to preserve their privacy, or it might be a criminal trying to launder funds. And they can establish that using other techniques outside of blockchain monitoring.
Okay. And is it forensics? Is it analytics? Is it surveillance? What do you call it?
So we call it blockchain monitoring. So we are ourselves not engaged in surveillance. We don't link wallets to individuals. What we're doing is collecting information, linking crypto addresses to services like exchanges or custodians, to dark marketplaces or ransomware wallets. We're not ourselves engaged in surveillance.
Okay. And is using CoinJoin in and of itself, does that make you suspect? Does that automatically flag you as a type of user? So
the challenge that compliance officers and exchanges face is how can they distinguish between somebody using a CoinJoin for privacy preserving purposes or a dark web drug vendor who's trying to cash out their funds. So it could well trigger further due diligence and further investigation of you, but it doesn't in itself mean that you're definitely a criminal.
Okay. So we had a question about the the relationship between data across different entities when it relates to privacy. So forensics companies or blockchain monitoring companies are tagging UTXOs, applying attribution to transactions, and exchanges are enforcing KYC on those customers, or on their customers rather. The exchanges are the customers of forensics companies, and law enforcement agencies are also their customers, or the customers of forensics companies. So you have these two buckets of tagged UTXOs and KYC UTXOs. Is that information being shared? If I buy Bitcoin on Cash App, does everyone in this space that's looking at the blockchain know that I've effectively bought it? How does that work?
No, absolutely not. No personally identifying information is ever exchanged between us and our customers. The only sort of information that might be shared by an exchange is, for example, if they've suffered a hack or one of their customers' accounts has been stolen from, they might share that transaction information so that we can tag it. And then if those funds go to another exchange, that other exchange can potentially freeze those funds and return them to their rightful owner. So that's the only real kind of information that's being shared.
Okay. Matt, you might be the right person to talk about the Neutrino acquisition and kind of the thesis behind it. Can you give some background there?
Well, so Neutrino was a chain analysis firm, I guess a competitor to Elliptic, that was acquired by Coinbase, which is, I think, probably the largest exchange in the world. And at least by how much Bitcoin they control. They control like 900,000 Bitcoin. So in terms of their users, and that's what they're holding. And that's a measure that can't be gamed like volume can be gamed. So they acquired Neutrino, and they said the main reason they wanted to do it, at least their PR team, when they came out and said it, was that they wanted to protect user privacy. They didn't want to share any of this data with outside companies. They wanted to do everything in-house. I don't know like how much truth is to that. What I do know is I don't think Tom is like intentionally trying to mislead people, but the ultimate reality of the situation is even if you're not exchanging, Matt bought 25,000 sats on Cash App, they know it's a Cash App user, right? And they know it's a Cash App withdrawal. So they got this Cash App user, and let's say they have it in their system as like user 5789, because there's a number instead of a name. And then they say that person's involved with criminal activity. Then the requests go out. The chain surveillance firms aren't the ones doing that, I imagine, but then the requests go out by whatever the effective government authorities are to get that individual information, right? Because they know which exchange it comes from. Am I mistaken there on that, Tom?
Yeah, so if law enforcement, for example, know that a specific crypto address has been engaged in criminal activity, they can use blockchain analysis techniques to trace that wallet's funds to an exchange and then ask that exchange for the KYC information through some kind of subpoena process. Yeah, that's certainly possible.
Right.
But
so even though you don't have to handle that information, it's still, in practice, it's basically the same end result for the exchanges and the governments involved, right?
So, but we as a company though don't have any information on who owns that wallet. It requires the combination of blockchain analysis and the KYC information that's being held by crypto exchanges, and they don't share that information with us.
They don't share that information, but they're exposed to it, right? So let me give you an example. Let's say that Sam buys 1 Bitcoin on Cash App, and then later on he goes to spend that on something. The recipient of those funds, if they use your piece of software, they can be like, aha, so he bought it on Cash App, and then he spent money there, and then he did that, and then he deposited in this exchange. They can see all of that history, and they know who he is. So
yes,
that's not great. I mean, there's no PII, but I mean, they're seeing that you're exposing all of that because of the metadata that you're tagging on.
Sure, but if that is really a concern for that individual, use coin joins, use a mixer.
Sure.
You can't trace
so,
all
and
those.
then, absolutely. And what we've seen thus far is that your software and software from others like you is being abused or used, whichever way you want to view it, to just automatically mark anything coming from a coin join as bad. It doesn't matter whether it's legitimately bad or not. That just gets flagged, accounts get locked. More often than not, those customers it takes them 6 months to get their funds back. There's none of this like due process. Don't worry, we're just trying to find out where your funds come from because it's weird that you're using a coin join. They just like auto block.
Yeah, so I
You're
don't think
effectively-
that's true.
you-
I mean, across our customers, that's not the default policy. It's not to close the account of anybody using a coin join. It's about looking at their overall activity and what kind of volume is coming from the mixer and how the customers reacted. How have they responded to questions about what the ultimate source of funds are?
Yeah, so Riccardo, that actually leads into my next question, which was kind of an understanding of what the measurements or what the metrics are when we're looking at suspicious activity. So the Bank Secrecy Act requires financial institutions to keep records and also to report any kind of suspicious activity. It seems, and I may be wrong, so this is part of the question too, but it seems that it is the blockchain monitoring companies that are, they define the arbitrary metrics that categorize something as suspicious or not. Can we talk a bit more about that? You're shaking your head, Tom. Is that not the case?
Absolutely not, no. So it's up to the user of our software what is suspicious and what isn't. We simply tell our customers where funds have come from. So this transaction has come from a coin join. How that's interpreted by our customers is completely up to them and their risk appetite.
Okay. So tainted UTXOs then is something the customer then would interpret.
Exactly.
Correct? Okay. Riccardo, can we talk a bit about Lightning then? Is your work relevant to, is it in privacy? Is it using or trying to leverage Lightning for its privacy features?
Sure. So yeah, yes and no. I mean, there's a bunch of work that we've been doing on the Lightning side, particularly on privacy, and also interoperability, because I'm of the opinion, and there are others who share this opinion, that storing anything on chain, whether it's on Bitcoin or on Monero, is whether you're using a coin join or a privacy enhancing currency, you're still storing that data for later analysis. And so the best way to achieve privacy is to have like very temporal transactions that only exist for a very brief period of time and follow a secure path, a private path from the sender to the recipient. And that's where technologies like Lightning are great, because you've got onion routing already, and typically the flow of funds is from the sender to the recipient with very little metadata being leaked in between, if any. Of course, you do have issues with like when balances settle, when channels close, that bleeds information, but things like confidential transactions fix that. So there's work being done in that space. We contribute to it. We're big fans of what's being done on Rust Lightning, and we've worked on Rust Lightning to try and get it to a mature state. And I do think that that's probably, or hopefully, the future of privacy that is good enough for most people. Where just using Lightning in the normal course of events will simply not bleed enough information, leak enough information for you as an ordinary consumer who's buying something online, or paying for a service, or donating to a political organization or whatever organization that you don't want all your fellow colleagues to know that you're doing.
And so how does it work though? You have Monero on Monero's chain, and you're using Tari to then conduct swaps across Lightning? Is that
no, so Tari is unrelated to that. Tari is a decentralized assets protocol, which is also aiming to add or to be privacy preserving. But obviously, because of our our love of privacy and our belief that privacy should be the natural state of any system that you're designing, and also because we think that a lot of things will be built on Lightning in future, we've been contributing to Lightning development. So it's sort of unrelated to what Tari is, and yet still an integral part of it. You can't build on the shoulders of giants, and you can't go and plug into systems like Lightning later unless you've actually contributed to getting Lightning to a mature state.
Yeah, definitely. And part of the mature state, I think, has to do with the UX. Matt, can you speak a bit about the gaps that exist currently with UX and privacy?
On Bitcoin or Lightning?
Both, either.
Both. There's huge gaps. I mean, it's a major work in progress on both fronts. You know, the Bitcoin ledger is a open ledger that, you know, a lot of us are speculating will exist forever. So if you make a mistake on that ledger, that mistake will also exist forever. So UX in terms of privacy becomes even more important, because you don't want the users to shoot themselves in the foot. And even worse than a user shooting themselves in the foot is a user shooting themselves in the foot and not realizing they shot themselves in the foot until they realize like 4 years later, 5 years later. So there's a lot of work being done there. The way I look at Bitcoin privacy is there's basically three different categories. We have protocol level, we have app level, and then we have layer 2. As someone who's been in Bitcoin for a while, I tend to try and ignore the protocol level stuff and just assume it's not going to happen unless it does. So then we're left with app level and layer 2. As Riccardo said, I'm cautiously optimistic about Lightning being like a mainstay of Bitcoin privacy usage. And CoinJoin is what we have right now. So we have CoinJoin, which is like attempting to actively break the trail of your transactions. And then we have other things you can do at the app level, which is like wallet fingerprinting, like not allowing it to be obvious like which wallet you're using, because that can reduce, you know, the amount of people, the crowd you're hiding in. We're just breaking general heuristics, which is stuff like PayJoin, where the recipient is also contributing an input into the transaction, and coin control. Coin control is this massive UX hurdle in UTXO based chains that no one really talks about enough. If in general, like if a person is using a wallet, they see just a single balance. They see like I have 3 Bitcoin in the wallet, but really it's made up of hundreds of different UTXOs, thousands of different UTXOs, all from different sources. Some could be from Cash App, some could be used to buy concert tickets. You know, they can all be attached to different things. And if you combine those, then you're exposing your privacy to people who know where those UTXOs came from, whether that was a counterparty or whether not. So on chain, we have a ton of UX things we got to work on. Lightning is very, very new still. And the easiest to use stuff is custodial. So that is still very much a work in progress. But you know, the last 2 years have been massive in terms of UX on the privacy front. And the biggest one to me, and I've been a major proponent of it, is Samurai Wallet on Android, which tries to distill all of this on the app level and tries to make it very accessible for the average user to use. Stuff like just defaulting to Tor, if you're just like a regular old user and you're not using your own node.
Let's jump into CoinJoin for a second. Riccardo, what are the differences between CoinJoin transactions and using CTs? Is there a practical like use case to use one over the other?
So I mean, I guess like if we're comparing CoinJoin to Monero, then that's a different discussion. I mean, confidential transactions alone just obscures the transaction amount. So on something like Liquid, you still get all of the traceability that Bitcoin has, but you can't tell the amount that's being transacted, which may or may not make a difference. You know, for a passive observer that's looking for large movements, that makes a difference. For someone who's actually digging into transaction history, it makes almost no difference. So you know, CT is great, and there's, you know, don't get me wrong, it's an amazing piece of technology, and we use it forms part of Tari's underlying protocol and Monero's, but it is not a privacy magic bullet. It does not solve the traceability aspect of it.
Talman, from the analysis perspective, how do you, you know, if certain transactions on Bitcoin are by your customers flagged as suspicious or have certain attributes, how do you look at Monero, or what is the difference when you're looking at Monero, where all the transactions use CTs?
So we completely support people's rights to financial privacy, and we're not trying to compromise Monero or CoinJoins or mixers. I mean, I think it's important that people do have a choice when it comes to privacy. If privacy is important to them, then use Monero, use CoinJoins. But I don't think that should be forced on people. And I think, for example, it would be a mistake for the Bitcoin core protocol to continue to add more and more privacy features, because then you're imposing the trade-offs on all Bitcoin users, because there is a trade-off with privacy. you're trading convenience. So if you're using Monero or using a CoinJoin, it probably is more difficult to cash out your funds through an exchange. And privacy isn't that important to a lot of users of cryptocurrencies. It's not the prime use case for cryptocurrencies for a lot of users. So I don't think it should be imposed on people. I think it should be a choice.
So that's a really interesting point, because I assumed, and more from like the UX side, it seems like if we do want to make privacy more of like a baked in part of Bitcoin at least, then having it enabled kind of by default would make that easier. But the trade-offs in that case are interesting. So the trade-offs for how the different entities see these private coins might make their lives more difficult when they're trying to move it around, correct?
Yeah, absolutely. You're already seeing privacy coins treated differently to Bitcoin by exchanges. They class privacy coins as being inherently more high risk. And I think if Bitcoin keeps adding more and more privacy features, it will also have that heightened risk rating amongst regulated financial services businesses.
Great. Any comment, Riccardo, Matt?
Yeah, I don't know if I agree with that at all. Don't get me wrong. I agree that it might end up with Bitcoin having increased risks or presenting increased risks, and regulators might not like it. But like, what's the alternative? You know, it's like having no privacy is bad for everyone. It just leads to passive data analysis, and people end up getting caught in nets for things that they didn't do, for things that they're not even aware of doing. So I don't think that, I agree that privacy is a choice. The default should be private, and then you should be able to opt out of it. Absolutely. If you want to go and take all of your transactions and shove them on Facebook, or tweet about them, you're welcome to. But to have the opposite, we live in a world where everything, even private data, corporations storing PII, that data gets abused. And we have examples of things like the Equifax hack, of things like Facebook constantly abusing data, of facial recognition systems being abused. Why would we want to encourage a world where privacy is not the default? That just seems crazy to me. It's 2020.
So what are we actually concerned about here? We're concerned about exchanges being hacked and personal information being stolen. If so, what's the link to blockchain analysis there? What is the risk?
I don't think, no, I mean, your point was that if Bitcoin gets more privacy features, that's bad. And that I don't agree with. I think that Bitcoin should get more privacy features. It needs more privacy features.
Yeah, but my point was that a lot of people are less concerned about privacy and more concerned about some of the other characteristics of Bitcoin, like its openness, its decentralization. Privacy is a secondary factor. Despite all of these breaches that have occurred, I think people are willing to make that trade-off in some circumstances.
Well, I mean, I think the majority of participants aren't even aware of the privacy trade-off that they're currently making. They just won't realize that for a bunch of years until it bites them in the ass. I mean, if we're gonna talk about privacy coin usage, we should really talk about the ultimate privacy coin, which is US dollars, cash. And I don't know of any cash users that are like, I wish there was less privacy with my cash. Like, oh, this is a trade-off that I'm being forced into, that I have privacy when I spend cash. And cash is a similar situation as like a theoretically perfect privacy coin, or using CoinJoin, coming out of an exchange. You come out, they know who you are, and then when you go and you deposit it back into the ATM, they know who you are. But that middle ground in between, it's a privacy coin.
But plenty of people choose not to use cash because of the inconvenience. They're willing to give up that privacy for other benefits.
Right, but that would be more of what Riccardo's saying, where the default is privacy and then they're opting to a more transparent model if they want the additional convenience.
Sure, I just think that the default situation should be based on what is most important to users of the technology, not based on our particular personal beliefs.
Sure, but I think it's pretty. Sorry, I was just going to say, I think it's pretty well established, like, that privacy is net good, net positive. That's why browsers now try and enforce HTTPS. That's why we've pulled down the potential length of time that you can have a TLS certificate for, not because we're trying to protect dissidents or criminals or whatever, but just because if you don't have TLS, if you don't have HTTPS that is well designed and well engineered, then your ISP can sniff your traffic. The person working at the coffee shop can sniff your traffic. Like we understand that this is bad. Like exposing this data publicly is bad. And so we work on improving TLS and we work on making it the default. But then, with Bitcoin, oh no, we better not do that because that's going to somehow be bad for Bitcoin. I'm not seeing there's a disconnect.
Well, I think the difference that I think is that the transmission of value is much more highly regulated than the transmission of data at the moment. We have anti-money laundering rules that every financial institution needs to comply with. And it does cause friction if a financial institution suspects that a transaction might have come from criminal activity. And if a privacy coin or a coin join is being used, that suspicion might be heightened. And so it adds that friction to transactions.
I think the analogy you used previously to highlight just why there might be burdens or just why it might be burdensome to use privacy in general was taking a bag of cash to a bank and trying to deposit that bag of cash. It's similar where if all of your coins are have been through a mixer, that's potentially what you're doing when you're trying to on and off ramp, I think.
Exactly,
Sure.
yes.
So Perkins Coie put out a white paper on privacy coins and money laundering and the relationship between not just privacy coins, but like also things like Samurai and Lightning on Bitcoin and how exchanges should view them. And that white paper dropped yesterday. And it's a solid read, and I'm hoping it's going to guide exchanges over the coming months and years. And it really proves and demonstrates from a very renowned law firm, and has had input from many other regulators and lawyers. It proves that privacy is not bad when it comes to financial data or when it comes to financial transfers. And I think really maybe the disconnect here is the belief that Bitcoin has only gotten to where it has because of the lack of privacy. And I think that that's a fallacious belief. I remain unconvinced that that is the reason Bitcoin has grown in value or has grown in adoption. And there was this false belief early on that Bitcoin had great privacy, and regulators didn't knock it down despite that.
No, I agree. It's not the one enabling factor, but it has enabled it to get over that barrier during its early evolution. So no, I accept that it's the openness and decentralization and the power of the underlying technology, but there was this barrier to mainstream adoption in the early days, which I think that compliance in general and blockchain monitoring has helped Bitcoin to overcome.
And so does Lightning help in this pursuit, or is it helping at all? I mean, can you apply the same heuristics to Lightning, Tom? Is there any risk in our transactions on Lightning flagged as suspicious for certain activities?
So I think that similar to a mixer, if we can identify that funds have come from the Lightning Network, then we can provide the same kind of insights to exchanges. I believe Schnorr and Taproot is actually going to make that very difficult to do. I think the other challenge that Lightning faces, though, is are the Lightning nodes going to be classed as money transmitters and therefore themselves have regulatory obligations like identifying their customers? I think that's a big challenge for the Lightning Network.
Yeah, Matt, can you get into a bit about Schnorr and Taproot? Just a quick high-level overview.
I mean, the two big things for me is first of all, it's more of like a setup upgrade. There's a lot of things down the pipeline that we can implement because of it. And one of the main things is this idea that you can make a multi-sig transaction that looks like just a regular single sig transaction. And that's kind of what Tom was alluding to, because every Lightning open and close is a 2 of 2 multi-sig transaction. So if you're able to defeat that heuristic, then it'll be a lot more difficult to tell which are Lightning open and closes and which ones aren't. So it does help Lightning users, and it helps all other users by default there. Another thing that we could have in the future because of it is cross-input signature aggregation, which basically incentivizes if you combine your transaction. Right now, when you do a transaction, the more inputs you have, the more transactions that are on the input side that come into your transaction, the more expensive your transaction is. So if you have like Samurai's coin joins are 5 participants, but Wasabi, for instance, a competing implementation has 100 UTXOs per input side. That makes those transactions very big and very expensive. If you have cross-input signature aggregation, then that transaction would actually be cheaper. The more inputs you have would be cheaper because everyone would split the fee, and you would split the fee and you would pay the same fee as a single input. So that could make an incentive where a coin join transaction would be your cheapest transaction, which would be opposite of what it currently is, which privacy is more expensive for you. Does it completely erase the privacy versus cost trade-off? No, because you'd still be better off doing other things that would be worse for your privacy than doing that. But it is a big step in the right direction. But like I said earlier, I tried not to focus on protocol level stuff because it's just, in Bitcoin, it's very hard to get consensus for these kind of things. Even some of the optimistic takes on Taproot are 2 years. So we'll see when it comes. And right now I'm trying to focus more on app level and layer 2.
On that theme, do you see people paying a premium for privacy in the future if it isn't just by default?
Yeah, I mean, I think we see that every day, and in all of everything we do in our lives is you end up paying a privacy premium, both in cost and in convenience. It's always going to be the less convenient option. The thing is, we just need to make it easy enough and accessible enough so that threshold isn't too much. And one of the examples that I really like talking about is PGP versus Signal or iMessage. And with PGP, like, it was a technically sound innovation for encrypted messaging, but it's just very inconvenient to use. You had to like put a lot of time and effort into actually try and figure out how to use it securely. Something like Signal comes with centralization trade-offs, but it's as simple as going into your app store and installing it, right? And we've seen usage of Signal explode in comparison to something like PGP. And at the end of the day, like, you still need a user to desire privacy and desire encryption and go out of their way to not use the default texting app or whatever the default messaging app is. But we make that jump a little bit less severe.
Riccardo, any comment on that?
No, I tend to agree. I think that certainly reclaiming your privacy isn't costless. I've had discussions with people who have wanted to regain some measure of control and some measure of privacy over their data. And if you start with something small, like moving away from an email service like Gmail and switching to Proton Mail or Tutanota, that sounds like okay at the beginning, and then when people start digging into it and they realize how difficult it is to actually make the switch, how seamless a lot of the collaboration tools are in Google's ecosystem, and yet how painful the privacy hit is. I mean, it's difficult, and that's why my hope is at least with this one thing, with financial data, with where your money goes and where it comes from, at least we could maybe make it easier. At least we could give people privacy by default there, or at least my hope is that we will, because nothing stops an exchange from applying the same suspicious activity report rules that banks do. If you walk into a bank and you say, I want to deposit $100, the bank's going to go, okay, and they're going to take your $100. But if you walk in and you say, I want to deposit $10,000, well, now they might file a suspicious activity report. And it boggles my mind that, like, we can't just have the same thing with exchanges. You want to deposit $100 worth of whatever coin it is, some DeFi yield farming food token, and you want to sell that for Bitcoin, no problem. But you want to do $10,000 worth, well, okay, can we just ask like source of funds, which is, you know, what the bank would do anyway. And I'm hoping that that's where we go in the future, and not, oh, hey, please, can we have your entire transaction history laid out, or else we're just going to shut your account down.
Lightning kind of does seem like that, like the technology that would enable that, right? Because if you have Bitcoin as your base layer, that's moving massive amounts of funds, but you can hide the microtransactions that are happening on Lightning. That seems to be the way forward.
100%, and I'm pretty sure that we'll get over the UX issues. The UX issues at the moment are horrendous, but they're getting better. Like I went to CCC in Germany at the end of last year, and there was a Lightning beer dispenser machine, and it was surprising how many people managed to use it with very little difficulty. Okay, some of them are using Blue Wallet and other hosted solutions, but really it is getting progressively better. Electrum's recent Lightning support is also just a great step in the right direction, because there are a lot of power users that are using Electrum. And so now they get Lightning support for free. It's just baked into the software. And the more that happens, it does sort of trickle down. The more we end up with just power, not only power tools, but just amazing clean UX that abstracts a lot of the complexity of Lightning away from users. Because it works just fine right now, but now we've got to make it work well, and that's where we're going.
Yeah, I think the overall, or one of the overarching themes of this conference has been convenience versus privacy. The CFTC commissioner spoke about this. Jameson Lopp had a whole talk about this, and the crypto VC panel definitely went into this as well. You know, I'd struggle with this myself, where I don't know if it's abject paranoia or if it's healthy skepticism and healthy paranoia, but I'm happy that there is a cohort of people that are working on these problems on all sides. We are almost at time. Maybe we can do some closing remarks. And then call it a day. Matt, do you want to go first?
Well, first of all, thanks for having me. I really enjoyed this conversation. Thanks, Tom and Riccardo, for joining me in this as well. Appreciate all of your time. You know, I think it's important for people to realize that this is not just a Bitcoin thing. This is surrounding our daily lives. Like I really enjoyed that Riccardo brought up Gmail. Just everything about our lives today has resulted in this surveillance, corporate surveillance, overarching theme where a very small group of people have access to information on an overwhelming majority of people, and it's getting leaked, it's getting shared, it's getting bought, and it can't continue this way. Like it just we're gonna at some point we're gonna hit a pinnacle. We're gonna hit a critical mass where just everything just leaks after leaks after leaks. More and more of our lives online. You know, Equifax was a game changer. We had every single American's personal information, every single adult American's personal information got leaked. People are going to start to wake up, and hopefully we have free open source tools like Bitcoin that will bridge that gap and will push us forward. I just hope that interim period isn't as bad as it could be, and I like to think that governments will hopefully start to wake up and realize that it's a national security interest that they protect their citizens and allow their citizens to have strong privacy. Because if they don't do it, then we're going to have other countries are going to use it against us, and they're going to do surveillance on our own citizens, and it's going to become a huge mess. And I hope they realize that before it's too late.
Riccardo, Tom?
Yeah, I mean, I mirror a lot of Matt's comments. I think the one thing, and I'm really grateful that that I've been given the opportunity to chat today. One thing that I'd really want to encourage people to just at least try, is every 6 months, walk away from one service or tool or platform that you're using that is not protecting your privacy. You know them, you can identify them. Google's a culprit, Facebook's a culprit. That means Oculus is a culprit too, and so is Instagram, so is WhatsApp. And really, like, focus on one platform or one product every 6 months and say, this is the point in time where I'm going to delete my Facebook. Start with Facebook. It's the easiest one, frankly. But you don't need to delete your Instagram. You don't need to stop using WhatsApp. You don't need to sell your Oculus. Just start with Facebook itself. Shut down your Facebook account, request deletion of your data, and then spend 6 months without it. You will figure out other ways to reach out to people that you went to primary school with. You will not struggle to find people. And then in 6 months' time, pick something else. And maybe you leave the tools and services and products that you love the most, that you rely on the most till the end. But if you can reclaim your privacy just one thing every 6 months, you will find yourself better off for it. Because when that platform or that service or whatever gets hacked, you'll be the one laughing. You'll be the one going, well, thank goodness I got rid of my data when I did.
Great.
So
And Tom?
I think there is still the risk that cryptocurrencies remain just a niche curiosity. They don't achieve mainstream adoption, and I think that would be a tragedy. And I think the way that we ensure that doesn't happen is we reduce as much as possible the friction between traditional finance and cryptocurrencies. Once people are into Bitcoin, then they can go and explore privacy preserving technologies like Monero. But I think we should prioritize getting them into crypto in the first place. And I think the route to that is to show regulators, governments, that we can play by the same rules as any other financial services company. And that means being able to determine the source of funds, being able to meet the same kind of anti-money laundering obligations that any other financial institution does.
Fantastic. Well, thank you all for being here. I think the content and everything we talked about, hopefully our audience has a lot to unpack afterwards. But thank you for being here.
Thank you.
Thank you so much, Sam, Matt, Tom, and Riccardo, for the extremely engaging discussion. Riccardo, I will definitely take you up on the 6-month privacy challenge. Privacy in crypto is a really tough topic, and we really need healthy conversations like this to understand the pros and cons and discuss what's realistic and what's not.